All right. Good morning, traders, and welcome to the opening bell. Today is Monday, June 22nd. I'm Michael Boutros, Senior Technical Strategist with FOREX.com. Pleasure to start off the day with you. Apologize about the couple of minute late start there. Always tricky back-to-back webinars on Monday, but great to start the week with you guys. So we're seeing the U.S. dollar with a little bit of a kickback here early in the week. Oil prices are still trading lower, but we're holding key support. Gold prices have also slid lower. It looks like we are getting some progress going on with the Iranian negotiations. President Vance or Vice President Vance was at the negotiation table earlier this morning, and markets are taking some solace in this. So we'll see how all this pans out. All the U.S. dollar crosses are still sort of at key major levels. So we'll go over all the U.S. dollar crosses, gold, and oil. Any questions or trade setups you want to review, as always, feel free to throw them on the message board. We'll be getting started in just a moment. All right, great to be with you guys this morning. Hey, Angie's in the house. Ashish, Chris, DeRay, JP, Ken, Mohammed, Patricia, Robert. Not going to get to everyone, Seth, Mohammed, but great to see everyone this morning. Here's the DXY. So remember, the rally was a breakout, and it cleared that key resistance at 100 spot 15.35. That extended into the first major level, the 101.13. 101.14, a basic 38.2 from the decline off last year's high. This is the weekly chart. You know, we turned right ahead of that. The high last week was 101.12, so 1 pip ahead. But I wanted to highlight a few things. First of all, that lateral level is going to matter on the objective approach here. I want you just to look last to 2 years ago or 3 years ago, the 2023 closed lows that you made early and late in the year are right there as well. And momentum is at 60. Why does that matter? Well, I always tell you guys, momentum barriers, right? The momentum profile oftentimes, not always, but oftentimes in strong downtrends, momentum would hold 60. And in strong uptrends, momentum holds 40 support. So you saw 40 support basically on momentum since the start of the year. We saw 60 hold resistance since the breakdown last year. Now we're testing 60 as resistance in momentum. Watch this into the close of the week. A topside break above 60 on RSI, on weekly RSI, and a breach above that slope in weekly price action would suggest that there is not only a shift in the momentum profile, but a break of a major multi-month downtrend resistance. So it's make or break here for the dollar. Here's what it looks like on the daily chart. You can see that we're basically testing uptrend resistance as well. So basic slope support off the lows from May, a parallel extending off the May high. That caught resistance, and it converges on 101.14 as we speak. So that's near-term resistance for the DXY. Drill down even deeper. Here's the 4-hour chart. And this is the same pitchfork we've been tracking off the lows, right? Here's the 75% parallel. Right there is resistance as well. We went for a perfect clip of it last week. Here's Thursday's pullback. Boom. So resistance. Near-term support, 100 spot 65 into 77. That's the 2026. Well, it's no longer the 2026. It's the March. Let me adjust that. That's the March high. Okay. And bullish invalidation, 100 spot 15 to 35. Same region of resistance we were talking about for the longest time. The breakout last week, that's now near-term bullish invalidation. So you could envision a scenario where the long side gets a little tired here early in the week, but pullbacks would need to be limited to 100 spot 15 max. If we're heading higher, you're looking for a close above 101.14 to mark resumption of the uptrend. And again, there's nothing on the upside beyond that until like 101.70. That's the September 2024 high day close. Was also a very nice pivot in April, May of last year as well. That gives you 101.77, 101.92. So big zone here. Daily momentum at 70. So the breakout would be a momentum pop through 70 on a daily close basis and a price close above 101.14. to validate the break and the next major leg higher for the DXY. Till then, you're trading right below resistance. Here's Euro. Similar scenario on the inverse. The support structure here was 1416 to 1404. That's the low day close for the year. That's still respected from March. The July low comes in, the low close comes in at 1404. And that's the pivot zone we're looking at. Downtrend support converges there. This is a new slope. I adjusted this over the weekend. If we take just a parallel, guys, of the highs that we made back on May 12th and the high that we made back on June 17th, that parallel extending off the lows from April converge right there. And the slope on the interior levels with the pitchfork, boom, really clean median line inflection, 25% parallel inflection, there's support. So if we're heading lower on this stretch, rallies would need to be limited to 115, 1492. Key support 1404, 1416. Look for reaction there. Bearish invalidation, though, for the bulls to reassert control, for us to say a more significant low is in place and a larger trend reversal is underway, you would need to see the bulls take out basically 1590, 1578, 1576, the May low, the January low of this year, the 618 of the entire rally off the lows from that March rally. So it all converges right there. So the levels are pretty clean. Downside may be vulnerable above 14 near term. You're bearish below 1577. Near term resistance 1492 into 1482. As always, guys, not a trade recommendation from FOREX.com or StoneX, just my humble interpretation of the technicals as they present themselves to us here early in the week. Hey, Latanya, good morning. Sorry to miss your comment there earlier. Great to see you. Okay, that's Euro. Sterling, first test of resistance right here, 32.66. That's a 786 off the yearly low, but it's also the 25% parallel of that slope we've been tracking. So remember, the big whopper zone was 31.87, 31.94. That was the 38.2 retracement of last year's low. That was the basic 2026 March low close. It was the lows that we made on the close basis for April as well. Downtrend support was right there. We talked about that in the webinar on Monday, or on Friday rather. We got the reversal off at first resistance, 32.66. Now you're still bearish sub 33, 26, 33.02. The May low and the May low close. Also, this month's opening range low converges on the median line. So that's key resistance. Here's initial resistance. Support 31.94, 31.87. Key support 31.50, 31.40. It's the 100% extension off the high and the objective May and August swing lows from last year. I mean, that's definitive pivot action right there. So you're coming off downtrend support. This is initial resistance. This needs to hold if we're heading lower on this stretch at 33.26. Support 31.87, 31.93. We already defended it in Asia trade. At break below that, key support 31.53, 31.40. That should be a larger, more significant inflection zone if reached. Make sense? That's the British pound. PMI figures on tap tomorrow. So you got inflation print there. We got core PCE on Thursday from the US side of things. And even from the Euro side of things, tomorrow we get PMI on both manufacturing and services. Questions on sterling? All right, Aussie. I'm losing some interest here just because momentum is waning and we can't seem to make up our mind on this 70, on this darn 70 handle. So look, my favorite Fibonacci confluence is 100 off the high, 618 off the low. There's the 70 handle, psychological barrier, all that good stuff. We've been sitting there for 5 days now, 4 days now. Like, what's the deal? I don't know how to treat this trade from here. Look, initial resistance, 70.49. That's the low day close for the month. Bearish invalidation, 70.93. That's the 38.2 of the drop. That's downtrend resistance. That's uptrend resistance. That's the breakout that would suggest a more significant low is in place. Potential for resumption of the broader uptrend. 70 support, a break lower. And that's what we thought we were getting a couple of weeks ago. Goes for a test of key support. Remember Aussie on the weekly charts. Key support is still 69.56 into 69.42. That's the 2024 swing high and a basic 236 of last year's rally. Nothing fancy. Drill down deeper, daily chart. That's the 2024 high and high day close. Drill down even deeper. Not only is it all that good stuff, it's downtrend support. So if we're heading lower on this stretch, initial resistance is 70.44. That's last week's open. Really nice weekly opening range last week, right? Broke on Fed Day, was crystal clear, looking for a late week low. We got it. That's 70.44. Bearish invalidation, 70.93. Downside break. If we see this being a near-term consolidation, a downside break from here, you're looking for a test of 69.42. That's the major support zone. Make sense? Australia CPI data on Tuesday night here in the United States, and unemployment data on Wednesday night here in the United States. So you got a nice batch of data heading into the PCE figures on Thursday from Australia. Hopefully we get the volatility kick there, but look for some definitive price action. You're still bearish sub 70.93 broadly speaking, but this 70 handle has been like glue for the last couple of weeks. So look for a breakout there. All right, Tokyo CPI is on tap on Thursday night, and nobody seems to care about the data front because everyone's looking to see if the BOJ is going to step in. We got the breakout. 60.73 was the level. We got that on Thursday. The first region of resistance we talked about was 61.68 to 61.95. That's still resistance. We're checking it now. It's the 2024 high day close and the 2024 swing high. We're testing that resistance pivot now. Remember, the client base remains exceptionally net short, 90%. Okay. Someone put on X, tweeted at me last week. They were like, Mike, how is dollar yen still rallying and clients are still net short? What that tells me is that the pain threshold for this retail crowd on the yen, on the dollar yen short is pretty high. Okay. If these guys start getting cleared out, those short exposures are going to have to do what? They're going to have to buy. It's going to propagate the trade even more. So, as dollar yen rallies and you see the retail crowd holding the net short position, or even worse yet, gaining momentum on the net short, that's just telling you that if the regions of resistance break on a technical threshold, that's going to be an accelerated rally. And we've been seeing that every time this thing breaks resistance. Here's the last time. Here's this time. This is one of those levels. Okay, this is one of those levels. Northbound of 61.95. I don't have anything from a technical standpoint till 63.36. Okay, that's the or 63.33. Excuse me. That's the 1618 extension from the advance off the. Let me take you all the way back to the lows that we made back last year. So April, the high from August, the low from September. There's the 1618. So this is really big. Here's dollar yen on the weekly charts, just in case it wasn't enough. So stay careful here. Stay careful here. But this is a pivot zone, no doubt about it. 62 break, let's call it 61.95 would open up the potential for a much larger rally. Momentum is in overbought, so I would not get cute on this trade. Hell, even on the near term, momentum is overbought. So watch for a reaction there heading into 62. If we're heading higher on dollar yen, any pullbacks would need to hold 60.36 into 60.73. Former resistance, turn support. Okay. Okay. Last but not least on the FX front, Swissy. It's been it's an impressive trade, man. I love it. The technical structure is so darn clean. Here's what we're looking at. First, let me just take you back to the weekly charts. This one's been a doozy. 81's your next major pivot zone. That's a longer dated 618 extension. Okay. Dates all the way back to the highs that you made in 2022. But the reason that it's so important is because what price action did there was a clear-cut pivot last year, all throughout the year, the break in June causing resistance there ever since. That's 81, okay? This is a break of the objective opening range high for the year, puts the focus higher. Momentum is at 60. Look for a change there. A weekly close northbound of 81. Momentum above 60 on a weekly close basis would be a shift in the momentum profile, would be a break of lateral resistance. That would be your next signature move higher. That's from the weekly chart. right? Let's drill deeper. Here's the daily. Right now, right here, you're right below resistance. 81 is the November high day close. We tested it later that month as resistance. The November high and the August high day close comes in at 81.24. Uptrend resistance comes in right there. Momentum is at the door at 70. Okay. So if you break 70 on a closed basis and you break 81.25 on a closed basis, you're looking for 82. 81.85 is the May low. 82 is going to be 2 equal legs off the low from this year. But into this region, the long side might be vulnerable, especially if momentum never breaks it above 70. We want to see that 70 break if we're going to make a break above 81.25. Okay, drill down deeper. Here's a 4-hour chart. Pretty darn clean, right? You're seeing some divergence into the highs here on the momentum's oscillator. Uptrend resistance is right there. Lateral resistance is right there. Initial support, 80.32, 80.41. Bullish inval on the near-term front. I want to see the March high day close, 79.94, hold any major pullback. So initial support, ideally, bullish invalidation, resistance, topside break, you're looking for 82 all day long. Make sense? Pretty significant. Nice resistance here on Swissy. All right. Is the gold low in? The question remains, and the question still is unanswered. Okay, so 40.74 into 40.98, guys. That's the support structure that caught the lows earlier this month. Last week I told you if that low is in place, I want to see the low day close hold for the year. That was 42.12. It didn't hold. It broke, and it's now resistance. So for me, it puts the focus on this near-term breakout. 40.74 into 40.98, key support. Initial resistance, 42.12. We're hitting that now. Key resistance, 43.19 to 43.66. That's the yearly open. Just a bit higher is going to get that May swing low. So 43.20, 43.66. That's the level if broken would suggest at least near term, you've broken the highs, the range highs from pre-Fed. You've broken the May low. A higher high would suggest that at least you could put a pitch extension or a pitchfork off this and measure the move to see if you get towards that 200-day moving average. But all things held constant near term, this is your focal range break, 40.74, 42.12. I want to see a daily close out of that zone for some guidance on the near term. Okay. Jury's still out. Jury's still out. You're still in the downtrend, but look at the 4-hour chart. Or let me show the weekly chart. This pivot structure is absolutely critical. There's your lows from March. There's the high week reversal close from October. You know, there's the 618 extension. We're right there. We're right there. Last but not least, oil. So we're trading into support. We're trading into support. We're testing a break of support. 73.84 is the top end of that zone. Extended to 71.90. That's the 2025 yearly open. But this is your 200-day moving average. This is 2 equal legs off of the April highs. And we're looking for potential inflection here. If you zoom in, here's the 4-hour chart. Guys, this is the same exact pitchfork we've been tracking for weeks. There's the downtrend converging on. Again, 71.90. The top end is 73.84. We're testing it right now. Look for a response here. Weakness below 71.90 would be a break of downtrend support. And that would open up the potential for a much steeper decline. Nothing comes into focus until 66.40. That's the September highs and the 2024 low day close. Very nice pivot in price. That's basically 66.40s on the downside. So looking for potential inflection in this zone between 71.90 and 73.80. Resistance is 79.60 into 80.75. A break below this key zone, you're looking at a 60 handle near 66.30s. Right? Obviously, the news is going to be contingent on what's going on with any developments out of those negotiations with Iran, but all things held constant, you're at a major pivot zone here. All right. Okay, 9:52. Always a little tricky on Mondays. Do let me know if you guys have any other questions or trade setups. The main event risk starts for the U.S. side is on Thursday, but we do get tomorrow those manufacturing and services PMIs out of the Euro. Remember, they hiked rates again. It seems that they might have to hike some more. The BOE is on hold, so there's that divergence there on the two. But we'll be looking for the euro dollar and specifically the DXY. Both of those are at critical levels. We'll see if there's any follow through, and we'll keep you updated as always on MB Forex. Till then, best of luck trading. Hey, Seth, you're more than welcome, sir. Best of luck trading, and I'll see you guys tomorrow morning. Cheers.